Your broker says commission free. So why does the same trade cost 10 times more elsewhere? Here's why.
When you buy a US listed stock from outside the United States, there's a line on your bill you can't see. Your broker says commission free. Your trade confirmation shows $0 in fees. And yet, on the exact same $10,000 trade, one investor pays $15 and another pays $150. Same stock, same day, same 2 words on the homepage, commission free. The difference isn't in the commission. The commission is genuinely zero. The difference lives in a fee that most retail traders have never heard of, even though they pay it every single time they buy a foreign listed share. So this video is about that fee, where it hides, and how to check your own broker in about 60 seconds. Quick context on the data, because the scale matters. I looked at 194 retail brokers across 52 countries, regulated by 68 different authorities, using only each broker's own primary disclosures: official pricing pages, key information documents, costs and charges statements. Each broker was researched twice by independent passes, blind to each other, then reconciled field by field. If the primary document didn't confirm a value, that broker got excluded. No estimates. One figure kept jumping off the page. The currency conversion fee on that same $10,000 US stock trade ranges from $0 at the cheapest brokers to $195 at the most expensive. Same trade, same instrument, a tenfold gap between 2 of the most popular commission-free apps in the world. So let's start with why this fee even exists. US stocks settle in US dollars. If your account is funded in euros, pounds, Canadian dollars, Australian dollars, anything that isn't USD, the broker has to convert your money before it can buy the stock. Most brokers add a markup to the exchange rate when they do it. Not a line item, not a commission, a markup folded into the rate itself. That's why your ticket says 0. The fee is real, it just lives inside the exchange rate where the order screen refuses to show it. Which means commission-free is technically true and economically meaningless. The cost didn't disappear, it moved one column to the left into the one place the user interface won't display. Now the numbers, because this is where it gets uncomfortable. On the cheap end, Interactive Brokers and MEXEM, about $2 per $10,000 conversion. They quote 0.002%, but enforce a $2 minimum. Trading 212, $15. DeGiro, Saxo Bank, and Nordnet, $25 each. Lightyear, $35. And then 28 brokers, including Robinhood, Trade Republic, Scalable Capital, Swissquote, Tiger Brokers, moomoo, M1 Finance, and SoFi Invest, charge nothing at all. Usually because they let you trade in the asset's native currency, or they operate in the same currency as the market itself. So this isn't a fee you have to pay, it's a fee you've been quietly defaulted into. Now the expensive end. Avenue Securities, a Brazil-based broker, charges 1.95%, $195 on that same trade. National Bank Direct Brokerage in Canada, 1.7% on the first conversion band, $170. Wealthsimple, 1.5% on its default Canadian dollar account, $150. Questrade, also 1.5, also $150. In the UK, Halifax Share Dealing charges 1.25%, Barclays Smart Investor a flat 1%, E-Trade 1%, and Hargreaves Lansdowne 0.99. That's $100 of friction on a single trade on a brand name commission-free platform. The trade confirmation will not mention any of it. Here's where it stops being abstract. A one-off $100 gap is easy to dismiss. A repeated one is a different category of problem. Take an ordinary investor putting $500 a month into US stocks for 30 years. That's 360 conversions in a row. At trading 212 0.15%, the total conversion bill over 30 years is about $270. At Wealthsimple's 1.5%, it's $2,700. The gap between those two numbers is about $2,430 in pure extra cost. Now treat that 2430 not as a fee, but as money the investor could have invested instead, compounding at 7% a year. Over 30 years, that gap grows to roughly $7,650. At 10 years, it's about $1,100. At 20, $3,300. That's retirement money, transferred silently from the saver to the broker, without ever showing up on a single statement. Currency conversion is the cost of acting. The second most common hidden charge is the cost of not acting. 1 in 4 brokers, 24.6% of the 134 with a clear policy, charges an inactivity fee. Money taken simply for leaving an account idle. Dukascopy tops the list at 500 Swiss francs on a dormant account. GT247 charges 150 South African Rand. Standard Bank, 110. CIBC Investor's Edge and National Bank Direct Brokerage, 100 Canadian dollars. Ava Trade and Tradier $50 each, and another 14.5% of brokers, 17 out of 117 with a clear policy, charge a withdrawal fee, up to $100 at SoFi Invest, $35 at Revolut, just to take your own money out. Here's the key difference between these two categories. Inactivity fees and withdrawal fees are mostly avoidable. Trade once a year. Withdraw in larger batches. They go away. The currency conversion fee is not avoidable. It hits every single cross-currency trade you make every month for as long as you invest. That's why it deserves the attention the headline cost never gets. And here's the punchline on access. The minimum deposit, long used to keep small investors out, has basically collapsed. Of the 167 brokers I could confirm, 97.6% ask for $500 or less, and 115 ask for nothing at all. The barrier to opening an account is gone. The barrier to keeping your money is what nobody's talking about. So the verdict. Commission-free describes one line of the bill, whether the broker charges you per trade. It does not describe what your trade actually costs. And the pressure is about to get worse. From the 30th of June, 2026, the European Union bans payment for order flow, one of the hidden subsidies that funded a generation of free trading apps. When one hidden revenue stream closes, the others, conversion markups, spreads, inactivity fees, premium tiers, get squeezed harder. So remember the Trading 212 versus Wealthsimple gap from the top of this video. Same two words on the homepage. 10 times the cost on the same trade. That's not a quirk, that's the whole game. What to do with this right now? Open your broker's pricing page. Find the line called currency conversion, FX fee, or foreign exchange markup. If you can't find it, search the key information document. It's legally required to be there. If the number is above 0.5% and you trade US stocks regularly, you're on the expensive side of this study. 2 fixes. Switch to a broker charging under 15 basis points. Interactive Brokers, Trading 212, DeGiro, Saxo, the no-fee neo-brokers. Or open a US dollar sub-account at your current broker if it offers one. Wealthsimple, for example, has one that avoids the 1.5. The fee doesn't have to be paid, it just has to be seen.
Now you know the fee that decides what commission-free actually costs you. Full breakdown linked in the description.